with the DSCR loan, let's talk a little bit about the general terms and what are some of the kind of the key criteria for getting into one of those loans. As far as down payment, I know we can't quote exact rates, but roughly what that rate jump would be from typical prime rates. And then, if they have prepayments or not, we've already kind of alluded that they do. So what are some of those terms on the DSCR loans?
So you can still get a 30-year fixed rate. Minimum down payment is 20%. There are no upfront origination fees. Some other companies that I've seen will charge a point, 2 points up front. I think I've even heard of companies that charge 3.
Mm-hmm.
The prepayment penalty that North Point has is pretty minimal. It's based on the loan amount. It's pretty complicated calculation, but it's pretty minor fee compared to some of the other ones that I've seen out there, where they can charge you as much as 5 points if you pay the loan off within the first year, and then it kind of stair steps over 5 years down to 1 point for that last year. So yeah, definitely a question that you want to ask up front is, what is that prepayment penalty? So we have fixed rate options. The rate is typically going to be 1.25% to 1.5% above what you would find with the second home occupancy loan. So again, not crazy, not anything that's a double digit or anything like that. They're very, very reasonable rates for the opportunity that it presents.
Yeah. And are you able to buy down those rates on those types of loans?
You can. Yep.
Yeah.
There is that opportunity.
If you're going to be holding it for 5 years, you can run the calculations and probably see whether it makes sense to buy those down. But rates are so low right now that 1.25% to 1.5% jump in a rate is not usually that's usually a pretty decent rate still. The rates are, because rates are so low right now, that makes a lot of sense to still look at these types of products, especially if you don't qualify for these loans with your personal, with your debt to income, or, you're already maxed out on your debt to income and you can use the property. This uses the property income to qualify for the loan. And explain to people what a debt service coverage ratio is. That's what these loans are called. Can you explain to people what that actually means and what it is and what you're looking for in these types of loans?